Hi everyone, I'm Sissy Ma, Managing Director of Grow and Sell Your Biz and the host of the Capital Raising Show. My hope is that by showcasing successful capital raises, you will understand how and where to raise capital and avoid making the same mistakes others have. We're very lucky to have on the show today founder and CEO of AI-powered mining startup, Plotlogic, who recently raised over $2.5 million US in an oversubscribed round from top AI investors, Baidu Ventures, DCVC, 8VC, and Grace Capital. So Andrew is a mining engineer with a master's finance, completing a PhD in field robotics at the University of Queensland while running Plotlogic since 2016. He was previously GM at a number of mines for Anglo American and has also worked with Glencore and Rio Tinto. Andrew, we met at the Queensland AI webinar a couple of weeks ago when you spoke at length about the technology behind Plotlogic, which is AllSense. Thanks very much for coming on to the Capital Raising Show. How are you?
I'm great, and it's fantastic to be here. We're looking forward to having a chat.
Excellent, thank you. So first up, I imagine you would have done this many times, but what is your 30 seconds intro about Plotlogic?
Yeah, so we're an AI-powered mining technology company. We use artificial intelligence, big data, and advanced sensors that can determine ore grade in the mine before mining occurs, which allows mines to be much more efficient and much more sustainable. So we're a deep tech company, started here in Brisbane and going through a fantastic growth profile over the last few years.
Sounds great. Yeah, so how has COVID-19 impacted your business?
For us, the impact of COVID has been somewhat insidious because of the way that our company is structured and the timing of COVID aligning with the growth of our company. We were at a point where we were looking at doing a whole bunch of deployments this year with our prototype system. There has been some delays of that, so it hasn't been pronounced in terms of huge losses of revenue straight up, although we did have some revenue impacts, but it's more insidious in terms of the timing of those field trials and the ability to get out onto mine sites where there's been a lot of shutdowns and restricted access. So hurt us financially, but probably more importantly for us, it's impacted our ability to get our technology out on site. That said, we've still managed to make some fantastic progress. Every cloud has a silver lining, and for us, being confined as barracks, so to speak, has allowed us to do a lot more development, so that when we do go back out on site, and we're planning on going back out on mine sites next week, we're in a position where we can accelerate again. So it's been an interesting 6 months.
Is that on site in Queensland?
No, we're actually deploying in Western Australia. So we had border restrictions that made it very difficult for us to get across to Western Australia. After a number of attempts, we managed to get an access permit so we could actually get one of our employees to go across to Perth, and that person's currently in quarantine as we speak. And they come out of quarantine next week, and then we can start doing outside deployments.
That is interesting. I know one of my other mining technology clients, they were also delayed to go overseas. Actually, they obviously can't travel overseas. So so I guess for this is a capital raising show. So for our listeners, can we focus on the successful capital raise for Plotlogic? We talked about this angel round for US $2.5 million. Can you give us maybe some, I have a series of questions, maybe we'll just go one by one. So when did this actually happen?
So we closed around approximately October last year. And to build up to that round actually took quite some time. Coming from a corporate background, I knew absolutely nothing about capital raising. So it was a bit of a steep learning curve for me to be involved in a deep tech company and go through that capital raising process and understand some of it's jargon, but a lot of it's about understanding the relationships and what investors are specifically looking for, and then getting the matching of different investors who have different investment requirements and profiles to what we were offering. So it took quite some time. But yeah, we managed to, once we got traction and brought on our first lead investor, then very quickly after that, we closed the round and then went beyond closing the round and ended up being significantly oversubscribed. So it was a pretty good position to be in, and now at a point where, we're still having regular conversations with investors that would still like to be, part of the investment for our company.
Right. Yeah. And so did you actually have revenue before the round, or was it a pre-revenue round?
No, it was pre-revenue round. So that was one of the big first challenges that we encountered.
Right.
So when I first started trying to raise, there was a few things that went against us back when we were starting out. One was mining technology didn't have a huge amount of traction, although it's certainly getting momentum now. So we're one of the early companies that was really focused on mining technology and how mining can improve sustainability and profitability for mines, when a lot of companies weren't really looking at that. Secondly, I was a sole founder, so that's a big red flag for
that's right. Yeah.
a lot of investment firms. They don't like the sole founder
did you
model.
take on any co-founders along the way? No.
Still, I had still self-founder. I had a couple of key employees that came on board quite early, and they've been part of the team, particularly from a very strong technical background. A lot of what we do is really deep tech, so it's a lot of hard physics and maths, and so having people on board that are committed to the business and can focus in on that has been really important to us. So they're some of our key employees that we've had from quite early on. But yeah, certainly was sole founder, and so then the other two factors that was really quite against us, I guess, from day one, is when we went to North America. We were also an Australian company, so a lot of North American companies weren't outside of their investment remit to invest in Australian companies. And as you pointed out, we're pre-revenue as well. So we had a few.
We had things against you, right?
Yeah. So it made it wasn't an obvious pitch for a lot of companies. They kind of, I guess, even companies that liked what we were doing were saying, really like what you're doing, sounds fantastic, but it's outside of our scope. So early days was a lot of networking, just having conversations with people, and getting to know people who might be interested in getting to know us and going through that. So it took quite some time.
Yeah. So did you actually have any advisors helping the race, or did you do it yourself?
No, I did. So a guy that used to work for me a long time ago ended up working for McKinsey out of New York and Montreal. He made the initial introduction for me to a group that was based in Montreal. Made a flight over there, and from there I had a whole bunch of conversations with people and made a really good connection with somebody that was actually based in Toronto. And over a number of conversations, that person I ended up bringing on board as an advisor, and he's been really quite helpful in helping us invest money. So certainly having an advisor on board that understood and been involved in lots of transactions. So previous to doing current work, he was on the other side of the equation, doing literally reviewing 250, 300 companies a year for the fund involved in. So he had a lot of experience with seeing a lot of pitches, a lot of companies, and in deep tech and in industrial technology businesses. So really understood that sector of the market from investors' perspective, and was able to help provide us with some guidance about how you explain what you're doing in a way that makes sense, and in a way that is attractive to investors, and also being able to steer us around some things and say, look, you can by all means talk to whoever you want to talk to in terms of investors, but certain investor groups will unlikely to want to invest in you, so you should be focusing in these certain areas. So that sort of guide is quite helpful for us, because I spent a lot of time going backwards and forwards to North America. We went over there, I think on average every 6 or 8 weeks for about 9 months to just build relationships and build a presence, get to know people, and through that.
So you actually saw a lot of VCs, high net worth, or did you how many you had to pitch to?
I lost count after 100. I naively went into it thinking, I'll keep a record of all the companies I speak to so I can tally it all up. And there was a spreadsheet and then a bunch of spreadsheets. Yeah. But it was well over, I think it was probably, between 100 and 200 pitches that we would have done.
Most definitely relate to that. Yes. 100 to 200. That's still quite good. Yeah, but so I was lucky that we got onto, through my connections, got onto I guess you'd call it an incubator of sorts, targeted at tech firms, that was organised through Canada. So it was what incubator is that?
It was called the Creative Destruction Lab, and so we they really target on companies that are involved in deep tech and sort of cutting edge AI, or looking at problems that are coming from general opportunities that are coming from research that generally require a lot of technical heavy lifting to get going, as opposed to some of the other areas which are less so. So we got onto that, and that also allowed me to make some good introductions. And through that, I was able to meet probably 50 VCs, and from there, I also made some introductions, into the Silicon Valley, and led to other introductions. And that's sort of eventually spread a network out wide enough that we got some people that were excited about what we're doing.
Did you actually participate in that accelerator, or were you?
Yeah. So I think we were, as far as I'm aware, one of only a few companies from Australia that actually had been through the program. It was a program where essentially it's an opportunity to go and meet some investors. You pitch to them, somebody's willing to mentor, then you go through the next phase. So they start with, I think, maybe 100 companies, and then by the end they're down to maybe a dozen or so. So I was lucky enough to get through that. Get through that program, and got some good mentorship from people. That the reason why it was in Montreal was because they have a really strong AI group there. Joshua Benio, who's one of the sort of preeminent guys in AI in the world, was actually based there, so he was involved in the program as well. So it's good to make some connections with those guys.
Yeah, wow, that's great. So did you make a conscious decision to go overseas rather than, talking to VCs in Australia?
So it was tested. Being a scientific person that I am, I like to sort of test the hypothesis before I get too carried away. So I had a bunch of conversations with some Australian VCs. And there was really, to be frank, quite limited appetite. There was probably one or two companies that sort of generally liked the idea of what we're doing, didn't really fit with their remit. They were small funds as well, so only like $50, $100 million funds. So not a lot of capital flying around. And for quite a few of the venture capital firms that we spoke to, we either weren't a fit in their portfolio, or they'd already invested in what they would see as being a competitor. And so there just really wasn't any appetite for us at all. Being pre-revenue didn't help. So there wasn't a lot of appetite for pre-revenue investments, and all those other factors as well, mining technology, sole founder, etc. So I was just raising a sea of red flags to every Australian.
Right. But you ended up attracting quite a few VCs into this, angel round. How did you actually attract the attention of Baidu Ventures? They're from China. I know that they're AI focused, but is it a group that from Silicon Valley or from China?
So Silicon Valley. So
Yeah.
Yeah, so it was one of those, sort of almost cliche, networking, getting to know people, making introductions. And Saman, who's the head of BV in San Francisco, happened to be in Montreal when I was presenting to someone else. He heard about what we're doing. I caught up with him for a coffee. We had a chat, and then he said, "Hey, reach out when you're back in Australia and pitch us." And then it sort of went from there. And then he made some other introductions. So yeah, it was a lot of it is it's not super scientific. It's getting out there, talking to people about what you're doing, talking about the investment opportunity, and in this particular case, we met BV. And that was, after the several hundred or 100-odd introductions, it was that we came to talk to us further. And then, once we started talking, not just with BV, but we had a few other companies, but by that stage as well, that were quite strong on us. But once we'd actually got to a point of being able to, I guess, hone our story and present it in a way that makes sense for people, then we got a lot more traction. And so, once we got BV and then DCVC, quite quickly we were able to close the round out, and unfortunately had to turn some people away, but hopefully did it in a nice enough way that they might come back for the next round.
Yeah. So was BV the lead investor in this round?
We ended up with dual leads. We had BV and DCVC. So Ali from as a partner with DCVC was also the lead. So yeah, we had dual leads.
Right. Was DCVC through your networking sessions or you?
No. So they were an introduction through an introduction. I can't remember what layer exactly that was, but it was through a series of introductions that eventually I was introduced to Ali, and Ali had been coincidentally working on an investment hypothesis of doing stuff in mining technology, and then saw what we were doing, and that aligned with what they were thinking and the opportunity I was seeing, and that's how it evolved.
Wow. Yeah. So connections of connections, very important. Yeah. And the AVC is the same story. Was that there from?
So they were an introduction from introductions from introductions. So it was warm introduction.
Warm introduction. Very important.
Yeah, along with Grids Capital. So Grids Capital is memorable because they came directly from Saman's relationship, and Grids Capital said, look, we like working with Saman, and if he likes you, we like you. So
okay, yeah, that's right. Yeah, it happens a lot like that, isn't it? But they're from Brazil, aren't they? That Grids Capital. Yeah.
Yeah. So they have the guy that runs that company, Guy Prerevenue. He's a very well-renowned technologist and investor in Brazil, and has written a whole bunch of books in Portuguese. So unless you can read Portuguese.
Try and get that translated to English.
So he's extremely highly regarded, and obviously Brazil has a very strong mining culture as well. So I think that we saw the opportunity there.
You didn't have any Canadian investors?
Interestingly, we found the Canadian market was somewhat similar to the Australian market. So pre-revenue, there was definitely interest in mining tech in Canada. Probably more focused on oil and gas. But certainly there was interest in mining tech in Canada. But again, I think my read of it, maybe incorrectly, was that they seem to be more conservative in their investment approach, somewhat like Australia, where they're looking for more revenue, more proof points, all those sorts of things. Where when talking to the guys in Silicon Valley, they still did a huge amount of due diligence and had a really sort of deep appreciation of what we were doing, and a very robust approach to making sure their investment made sense. But on the same account, they had seem to have a higher appetite for risk to say, yeah, we get that you're pre-revenue, we know that. We're not going to use that mark against you. We appreciate that stage of business that you're at, and take that on board. I mean, that said, we were technically pre-revenue, but we had by that stage received some funding through some grants that we'd been engaged in. So we did have tangible proof points, so to speak. And we had our first paid contract in place before we raised the round. So we did have, I guess, some revenue and points in terms of what we're doing, but in terms of that sort of monthly recurring revenue model that people
because consulting revenue doesn't count, right? So I was just curious, the type of, your business would fit quite well in the Queensland Business Development Fund, right? Did you consider that as part of the investment? I suppose because you guys were subscribed in the round, you didn't need to go to the Queensland government for that. But are you aware of that fund?
So we are aware of different grants and opportunities that are around. We previously applied for a fund that was called, I think it's called Mets Ignited or something like that. And they were not interested in us. That was I guess quite competitive. There was a lot of companies that are in Asia, and when I looked at the companies that they invest, or the businesses or the opportunities they invested in when we applied, they invested in some other and that type of thing. So it didn't really fit with what we were doing, which was building products that could go out into the industry. So it probably wasn't aligned with what they were thinking about, when they were looking at us. No, that's good. So what do you think made these VCs actually invest in you guys? What's the top three factors, for example? I think we have we have a big vision in terms of what we really like to do and take the company, and the investors that we've engaged are all very much aligned to that big vision. But not really the counterpoint to that, but certainly the subclause to that is that we're also taking things, I guess, at a very small level to begin with. So, the ore sense, we say it's a small level, but it's, many years of development to even build this one piece of technology that's, able to deliver huge amounts of value. We just want to focus in on that one thing and get that right, and get all the elements around that right before we start, diluting our attention too much. So have a very big vision, but also have, some very near-term tangible elements within that make sense and can make a very strong business. And the investors we've had on board have all been very much aligned to that, saying, we love the vision, love what you want to do for the industry and the sector, but also appreciate that you're taking an approach of saying, let's tangibly deliver something before we start, overreaching and going into things where potential will get quite diverted. So I think there's a good vision alignment and good strategic alignment. And I think that the investors see the opportunity that we saw many years ago was that, there is a huge opportunity within the mining space to be able to do things that are quite innovative, add huge amount of value to mining businesses, but also globally in terms of improving sustainability for mining operations, more advanced, more sophisticated, more sustainable, less carbon pollution, and at the same account, making those mines actually efficient and doing it to generate value along the way. So I think, that all those investors saw that as well, and saw that, the sector had been probably, underperforming in that space, in the mining tech space. And the mining industry's, got a great track record of innovations. Some of the stuff that's been happening in processing facilities is excellent. There's been great work done by a lot of OEMs and mining companies to do machine automation and the like. But that sort of systemic approach to really understanding the resource with a high degree of precision and all those interrelating factors has been something which has been probably a hard nut to crack for the industry, and it's something that the investors are seeing as being something that we have a fantastic opportunity to make that happen.
Is it also because what you're building is actually unique at this stage? You're sort of first to the market.
Yeah, the first to market is important. Also, I think from a purely competition point of view, the element that we're working on has got quite high technical barriers to entry. So my first two employees, between them, had about 60 odd years of experience in their relevant domains, both of them postdoc. One of them was working for University of Sydney and doing a whole bunch of stuff in this exact subdomain for Rio Tinto, and the other person, worked for Berkeley and worked for NASA and JPL on some really sophisticated optical sensing projects. So to be able to harness their capability it gave us quite an advantage, and we've managed to build a really good collaborative relationship with the University of Queensland. The Smart Machines Group, who's led by Professor Ross Macquarie, has a fantastic capability in mining automation and mining robotics and sensing. So that sort of combination of skills and experiences has allowed us to do things that other groups find very difficult. Rio Tinto themselves was attempting to build this exact same technology that we've built, and we've gone past them. And BHP was also attempting to build this technology, and they've now partnered with us as opposed to try to develop it out themselves. So there's a lot of different facets to make this technology work. The actual optical physics is really hard. The spectral geology and AI elements are really hard. And then the integration into the mining system is not trivial either. All those things create a bit of a barrier, I guess, for other people. So it's it wouldn't be super easy for somebody just to go and buy a couple of hyperspectral sensors and a LiDAR and just start doing this stuff. Or if they can, then fantastic. Well done. So it's certainly been a pretty heavy lift to get to here. It is a genuine deep tech company, so we see that as being a strong advantage that that allows us some sort of space to operate, if you like. And I think the investors have seen that as well as a way that we can sort of protect a position and then expand.
Very good. Okay? Sorry, there was a bit of lag just now. So what were the lessons that you learned through this process?
So the biggest personal lesson for me is I'm a naturally introverted type of person. I actually like to sort of read books and deeply think about certain things. That said, I mean, I've always run large teams. So prior to starting this company, we had about 1,200 people in the businesses that I was running. So used to running large teams, but there's a lot of structure and like around that. So certainly it was well out of my comfort zone to be going and what I call self-promoting, going to North America,
That's
Silicon
right.
Valley. It's all about how good you are and really, talking yourself up. So there was a bit of an internal wrestle for me, is that I didn't want to compromise my values or my personality or integrity. But on the same hand, it was really important to be able to promote the business and promote what we're doing and promote our capabilities. So that was a hard one for me, to be able to feel comfortable being quite uncomfortable in those sorts of environments. And being able to do it in a way that's true to myself and the business and what we're doing. So I think that was, one of the big lessons, is that, you do have to be willing to, go and do lots and lots of presentations and lots of introductions and be able to talk about your company, really passionately and positively. So, and then coupled to that is getting out there. You can spend a lot of time thinking about things, but until you actually do something, it's all just thoughts, and that adds no value. So a lot of it is just being willing to make the connection, have the conversation, go again. So that were probably two. And the third one is which is what I talk to my team about a lot in our business, is just leaving your ego at the gate. You've got to really just take your ego out of the equation. There's lots of investors that you know, that aren't going to invest in you for reasons that are completely outside of your control. And if you take that personally, I
Yeah.
think that can be a hard bitter pill to swallow. You really have to distance that and say, hey, I get that. Take on board the feedback. Had, you know, every opportunity to speak to somebody I saw as a positive experience, irrespective of whether they wanted to invest or not, irrespective of whether they were, able to make warm introductions to us or not, irrespective of whether able to give feedback or not. And often people would, if you say, hey, appreciate you didn't invest in our company, that's cool. We'd really love 5 minutes of your time just to get an idea as to how we could probably help improve what we're doing or whatever else. And we found even for a lot of really top venture capital firms, they're quite happy to give the feedback and say, yeah, this is an area for us that we didn't see as being a fit for us or whatever. So being quite pragmatic about taking that feedback on board and using every opportunity to learn and hone. You know, I still annoy way too many Uber drivers. Every time I get in an Uber, I do my pitch. So it doesn't matter whether it's in Toronto or Montreal or San Francisco or Sydney, Melbourne, Brisbane. I jump over.
That is amazing. That reminds me of someone who said, "Always be raising."
Yeah. I think that's important, and since we've raised and closed the round out, you know, we're still focusing on building strong investor relationships. And you know, I spoke to some investors last week, even though they know the round's closed, but they might be interested in a future raise. I'm talking to some more next week, and you know, it doesn't have to preoccupy your entire day, but I think it's really important to maintain those relationships and continue to talk to people about what you're doing, because you know, in the type of business we're running, it's very difficult to bootstrap it. You need to be able to you know, buy lots of equipment. In our space, the gear's not cheap. Even, you know, sort of a baseline sensor for us, if we build a research grade platform, costs us about $500,000 just to build one platform to take out to a mine site. So you know, it is quite capital intensive in that regard, and often because of the stage of development we're at, there's long lead times to revenue, etc. So you have to be willing to either accept that, you know, growth is going to be zero for a very long period of time, and you kind of just eke out existence as a simple person operator, or you accept that you've got to you need to attract capital in order to do that, and on that capital journey, it is you know, something you need to do routinely, and say, okay, we've closed this round, that's fantastic. Let's make sure that the investors that we brought on for the angel round are getting the information they need to understand that their investment is delivering a return. And then also build out the relationships, because we will be raising again, so that when we do go into a formal raise again, people know what we're doing and how we're doing it, and able to present our story in a way that makes sense to them.
Yeah, getting ready for the next round. So what's your advice to businesses wishing to raise angel capital?
So I think it's really important to understand the investors that you're talking with. It's very easy to be speaking a completely different language, and so some of that's quite nuanced. I found that coming from a very strong technical background, it's very easy to try to talk very technical terms, and for a lot of investors that'll be a miss, where they'll go,
it'll glaze over, right?
Yeah, but on the same account, you know, if you're not prepared and you haven't actually got that technical grounding, you'll get caught out a lot. So don't underestimate how many PhDs and people with really strong technical backgrounds are working for VCs. So you know, you have to also be, you know, really well prepared, both from a technical point of view and a business point of view and a vision point of view. But then also, once you've got all that preparation in place, be able to tell the story when you're pitching to people in a way that makes sense to them, so they can actually, you know, resonate and build a relationship. So that would be my advice: lots and lots of preparation, and then get out there and have a go. And there's going to be lots of fails, so get used to it.
And don't take rejection seriously, right?
That's right.
So many rejections. Yes. Well, that's great, Andrew. Thank you so much for all your insights today. You provided enormous value for our listeners. Thank you so much for listening as well. If you want to hear more about this topic or others, go to my website. As Sir Richard Branson said, learn to raise capital by any means necessary. Tune in again on the Capital Raising Show to hear another successful capital raising experience. Thank you again for listening.